In this video, we want to talk about Jumia, and Jumia is the Amazon of Africa, and they had some news late last week that caused price to spike higher. Now, before we get into the analysis, let's look at this article. It is coming from the Motley Fool. So the stock was surging Thursday of last week. It was up as high as 20%. Jumia published preliminary unaudited key performance indicators for the 2-month period ending November 30th. Company reported better than expected growth for orders placed, active customers, and gross merchandise volume, also known as GMV, during a key sales stretch, and investors bid up the stock in response. Over the 2-month period ending November 30th, Jumia's platform recorded 4.3 million adjusted orders, up 18% compared to the year ago period. Of those orders, 62% were placed during the company's Black Friday event. Total active customers also increased 9% year over year, and GMV was up 33%. Now, while the long-term expansion outlook for e-commerce services in Africa is very promising, Jumia's run as a publicly traded company has been marked by uneven performance and concerns about business visibility and outlook. Now, the company's recent reported look at performance across the recently concluded 2-month period suggests encouraging momentum on some fronts, but it remains to be seen to what extent the recent momentum can be built upon. And now, if we go back to the charts, back in July, price did form a daily buy level near that $12 level, as price was in an uptrend, as indicated by the higher highs and higher lows. However, the sellers took control at this $14 level and pushed price down, and in the process it formed a flip zone where we had now daily sellers near that $11 level as price continued to collapse into earnings back in August. And now what we find is price is now basing. Also, what's worth noting is price is below the key 200-day moving average. Typically, when price is below, you're in a secular bear market. When prices are above, you're typically in a secular bull market. Now let's scroll out to the weekly chart. Again, price did bottom out near that $3 level. As price was making higher highs and higher lows, price took out a key resistance level at $8, again before collapsing, eventually collapsing. So the question is, where does price head from current levels? Well, according to the weekly chart, there are no sellers really until you get to $10. Now that doesn't mean there's going to be no bumps in the road until price moves higher. Again, price knows memory, and as price moves higher, it is going to have to contend with this $8 resistance level again. Scrolling out to the monthly chart. Again, the charts are suggesting current levels is not a bad place to buy. As you can see, when price collapsed back in 2020, price rose higher, and again in July of 2023, price rose higher. So this is what we call the accumulation phase, and the charts are suggesting over the long term, price will move higher. Thanks for watching. Subscribe. Please like the video.